Hi everyone and welcome back to another video of Financial Impulse. So we are going to continue the series where we are going to find high quality undervalued stocks which are available right now in the bearish market, so that when the market recovers then you should be ready with your selection to make an entry in the bull market when the time will come. Okay, so this video is going to be very important. Just make sure to understand that this is not a stock recommendation video, this is just an educational video to help you make better trading and investment decisions, right? So with that said, let me take you to the screen. Alright, so we are going to discuss 3 stocks. So the first stock in the list belongs to Media Index, and that is Tips Music. Okay, so this is Tips Music, and like always there is the official link. Nothing much to see there, but still if you want to know about its business you can go through it. Okay, let's discuss some of the key important points. Okay, first of all, let's look at the about section. Tips Industries incorporated in 1996 is engaged in the business of production and distribution of motion pictures and acquisition and exploitation of music of right. Okay, the corporation is also a leading producer of Punjabi films in this country. Okay, so that is the basic thing you need to know. The market cap of this stock is around 7,000 crores, so it's a mid cap stock. Okay, now the industry PE is 37 and the stock P is 36.9, so that makes it undervalued, but we can say it is fairly valued. That's why it is very much important. Now, although it is fairly valued or undervalued, are the other factors correct, like growth of sales and everything? So let's dig deeper into that. So the current price of the stock is 542. Market cap is 7,000 crore as discussed. Reserves it has is almost 245 crore and a very small debt of just 2.74 crore. That's why the debt to equity ratio is excellent at 0.01. 3 years average sales growth 31.84 and profit growth 35.98, earning per share growth 36.64, interest coverage ratio 1101. Current ratio is above 1.5, which is great. Operating profit margin is looking very healthy to me, and PE and interest PE we have already discussed. Odd man Z score of 34.92. So this is looking pretty solid to me, the basic fundamental numbers. Now let's come to the sales and profit growth. Okay, from 2023 March to the trailing 12 months, if we take a look, then the sales have gone up really good. 187 to 242, then 311, 350. Okay, operating profit 102 to 158, then 207 to 36. Operating profit margin has also gone up 55% to 66, then 67, then 67. So it has consistently maintained that one. And then coming to earning per share, that has also gone up 5.96 to 9.90, then 13.04, 14.73. Looking very solid to me. Okay, the stock is looking very solid to me. Now coming to the shareholding pattern. So if we take a look at the shareholding pattern, okay, in the last 2 quarters, let's say the promoter holding is consistent. FI's holding has gone up slightly from 7.34% to 7.48%. DI's holding is almost the same, 4.97 to 4.94, almost the same. So the shareholding pattern is looking solid to me as well. So the fundamentals are good. Now coming to the price action, let's find out Tips Music. Okay, and let me put the weekly time frame. Okay, I'm hiding the fractal, we don't need that for this video. Okay, now if we take a look at the raw price action of the stock, we can see it has fallen by almost 50%. Okay, and now the price at which it is trading, it is actually aligning with a very good level of support, which was actually acting as a resistance earlier. You can see this is the support, again this one is the support. So let's take a look at the momentum indicators. So the momentum indicators are starting to show strength, but it has not yet completely shown its true strength. So I believe the stock will need few more weeks or maybe few more months to go up. Now let's take a look at the 200 days moving average, where it is. So you can clearly see the stock is trading below 200 moving average. What we want is the stock should go above 200 days moving average. This should turn in the upward direction, and then the stock should start using it as the support. Then only we can consider entering into this one. But for now, you can keep it in your watch list. This is a growing stock, okay, fundamentally. Now along with that, you also have to check the media index, Nifty Media. Here it is, Nifty Media Index, and you can see that is also giving us the same picture. It has not yet shown the true strength, so it will need few weeks or maybe months. Okay, it looks like it will take some months, but definitely this is one of the media industry stocks which you should consider keeping in your watch list for now. Why? Because the fundamentals are good and it is a debt free, almost a debt free company. Okay, so this was the first company in the list today. Okay, this is the part 2. Now the second company is none other than Coal India. Okay, so if you have been following this channel, you know that Coal India is one of the multi-bagger stock that we have discussed in this channel. Okay, it has given multi-bagger returns. Personally, also I have also gained multi-bagger returns from this stock from 2023 to 2024, late 2024. Okay, around that time. And this is a large cap stock. It's a heavyweight stock. You can see the market cap is almost like 2,70,000. That's a big one. The industry P is 16.3, stock P is 8.93. So definitely undervalued. And let's take a look at the about section. Coal India Limited is mainly engaged in mining and production of coal and also operates coal washeries. Okay, the major consumers of this company are power and steel sectors. Consumers from other sectors include cement, fertilizers, brick links. Okay, this is the about thing, and you have to go through the key points. Okay, I'm not doing it because the video will be very lengthy. Okay, now coming to the important numbers, market cap is discussed, stock price is 435.95 right now, reserves it has is very good, debt is also high, but still it is the debt to equity ratio is also looking good. 3 years average sales growth is looking bit slow, bit less, but you have to understand that this is a heavyweight large cap company. Okay, a stock which has market cap of more than 20,000 crore is called large cap, and this one has 2,70,000 crore. So you can imagine how big it is. Obviously the sales growth won't be like a small cap or mid cap. Okay, you have to accept that one, but the profit growth and earning per share growth is looking good to me. Interest coverage ratio is good, current ratio is above 1.5, very good. Operating profit margin, we have to see if it is steady or not. PE and industry PE we have discussed, it is undervalued. And now let's take a look at the profit and loss statement. So if we consider the last 3 years data, then we can see the sales growth is almost flat. Okay, that is what is reflected there, 9% growth. Operating profit, that is also flat for 2 years, then recently it has dropped little bit. Okay, this happens because change of government policies, increase of tax and many other factors, but still it has dropped. But we need to see that the drop is slightly less. Okay, 33 to 29, it's not like 10-15% a major drop. And also this is a large cap established company, so obviously it will recover. That is what we believe in future. Okay, now coming to earning per share, 60.96 to 57, there is a drop, then 48, and this is mainly due to the drop in operating profit margin because the sales growth is almost the same. The reason behind drop in earning per share is the operating profit margin. Now if we look at the shareholding pattern, here we'll get to see some interesting things. Okay, so you can see the promoter holding in the last 2 quarters is same, 63.13. FI's holding has gone up slightly, 8.22 to 8.38. Okay, now DI's holding has also gone up, 22.53 to 22.76. So this is clear indication that the smart money is increasing the stake and the promoter has kept their stake constant. So definitely it could be up for a good move maybe in future, but obviously these fundamental numbers are not enough. We have to see the price action. Okay, Coal India. So this is Coal India, and you can see that despite the slow growth of sales and declining earning per share, the stock price has gone up nicely. It has already started giving a good move, and this is in weekly chart. And if you go to the monthly, it is also showing strength. Okay, now let's go to the daily time frame and see if it has been trading above the 200 days moving average or not. So when we do that, we can clearly see it is trading. Okay, and 50 EMA, that is also above the 200 EMA, and here we can already see it has given a good golden cross. Now what could be the good or ideal time frame entry, because it has already established itself, it has gone up above this resistance level and also turned it into support. So seeing the price action, I can tell that it is starting to form kind of a channel pattern here. Okay, here this is the pattern. Let me draw one line here like this. I believe the stock will give a breakout after forming a pattern like this, and definitely in future it will use the 50 EMA as the support. As of now you can see it has crossed below the 50 EMA. but I believe that after giving a move like this, it is going to turn in the upward direction, and the Coal India will definitely start using it as a support, and that will be a good time for entry. So the good entry time or an ideal entry time for this stock could come very soon. Keep it in your watch list and keep tracking. Okay, and along with that, this stock is well known for giving a good dividend. Okay, let's see if we have the dividend parameter here. Yes, 6.09%. Earlier it was more than 7, but 6 is also a very good number for an established company. Okay, so definitely it's something worth considering. Now we are going to move to the third stock, and that is IRCTC. Okay, so you must be remembering that after getting listed, IRCTC did go up by huge percentage. People got greedy, they started investing at very highs, and they went into losses. Okay, because there is always a good time, a ideal time to buy any stock. Remember that if you are buying a good quality stock at the wrong price, then it becomes a bad investment. So that you need to keep in mind. So same thing happened with IRCTC. Now let's take a look at the current situation. So the details about IRCTC. I'm not discussing this one here. Okay, you can go through it. Market cap of 42,000 crore, obviously a large cap. Stock P 31.1, industry P 40.7, so qualifies for an undervalued stock right now. Now coming to the fundamentals. Okay, stock price is 536, reserves is 4,100, debt is small at 78 crores. Now earning per share is very small at 0.02. 3 years average sales profit earning per share growth is looking very good to me. Interest coverage ratio is very good. Current ratio is above 1.5. Operating profit margin of 32.89. We'll see how it fares to the previous quarters. Okay, and Altman Z score here is good. Now profit and loss. Now if we take a look at the profit and loss statement, let me scroll down a little bit, and we consider from 2023 the data from 2023, then we can see there is very good growth in sales. 3541 to 4260, then 4675 5024. Good growth in sales. Operating profit 1276 to 1466, 1551, then 1652. Very good. And here operating profit margin is also stable, although it has dropped a little bit, but still it has been able to maintain the earning per share and profit. You can see 12.57, 13.89, 16.43, 17.80. Now coming to the shareholding pattern, you can see that the promoters are holding 62.40% in the last 2 quarters. FI is holding 7.27 to 7.19, negligible drop. DI is holding 14.18 to 14.02. Here also there is negligible drop, no major drop. So the fundamentals is looking good because it is almost a debt-free company and it's growing. Okay, now let's take a look at the price action. Okay, so when we go to the weekly chart, we can clearly see that it has been falling for quite some time now. It has fallen from 1136 to roughly 500, so 56% drop. And if we take a look at the bigger picture in monthly time frame, then also we are seeing there is still weakness in this stock. So I believe that this stock will need a much more time to get back into the track, get back into uptrend. But definitely this is one of the stock which you can keep in your watch list if you are considering a safe investment at an ideal price. Okay, but definitely this one among the 3 stocks is going to take more time to recover. There is a strong downtrend right now. Okay, and there is no clear sign of recovery as of now. It is undervalued, does not mean that it qualifies for a good investment at the moment. Okay, it could go down even further. So definitely you should catch stocks when they are trending, not they are beaten down and sitting at an level where you do not know if it will go up from there or go down. Okay, so that you need to keep in mind. Okay, so these were the 3 stocks which I wanted to discuss in the part 2 of this video. And my favorite one, not favorite, or the most preferable one, will definitely be Coal India, because it has already given the uptrend. It is consolidating and very soon it could start continuing the uptrend. So definitely you should keep that in mind and use that opportunity. So if you really like the video, if you found it helpful, please hit the like button, share it with other people, subscribe to Financial Impulse, and don't forget to check the membership community. If you are already a subscriber and want to join the membership community, then you will be able to see more of stock analysis posts, and also you will be able to chat with me directly one-to-one on Discord, and you can ask your queries. Thank you for watching. Bye. Take care.